What is going on, everybody? Welcome back to another CYPRX detailed fundamental video breakdown. In today's video, we're going to be diving into this UBS report labeled Year Ahead 2025, Roaring 20s, the next stage. If you guys enjoy deep fundamental video breakdowns like this, do me a favor, smash that thumbs up button and subscribe. Make sure that you go back and watch yesterday's video because this is kind of going to be a continuation video from yesterday's Zoom call in the private community that we had that I released to you guys publicly, where if you watched it thoroughly through, we talked about different scenarios unfolding in the digital asset ecosystem, talked about risks as we head into 2025 that we could be facing. We also talked about market sentiment and the changing market dynamics and what things fundamentally could create those market swings and price action. So if you didn't watch yesterday's video, make sure that you go back and check that out because this is going to be a continuation video. So we have been an advocate of trying to wake people up and get people to see that there are some things pending as we head into 2025 that could be of concern. For example, any pushback on central banks globally, possibly cutting rates due to any upbeat economic data or rise or increase in inflation. I also have here inflation rising in 2025, causing the Fed to pause or potentially bring back rate hike options to the table. Any geopolitical escalations and tensions in the Middle East or Russia, Ukraine that could unfold. And from my personal perspective, worst of all would be, and probably the biggest risk to global markets right now, is the unwinding or the possible unwinding of the yen carry trade in 2025/2026 timeframe. All right. Now, if we can put these things behind us, in my personal opinion, the only direction is up if we can put some of these things on this list behind us. But we had been advocates of teaching you guys about this stuff because, again, due to market optimism and due to the sentiment that currently remains in the market, which is extremely optimistic, and I hope by all means that it continues, people are kind of not paying attention to these factors. And so here at CYPRX, as we are fundamentally driven in our market decisions, we pay attention to these things. So I posted this video clip from this BIS podcast that took place September of this year, just a couple of months after the Bank of Japan hiked rates on July 31st. In the first week of August, we saw some market turmoil. And the BIS representatives here go on to mention that crypto got hit extremely hard.
Maybe also a telltale sign that retail investors got hit was the reaction of crypto in the height of the turmoil. So we saw Bitcoin and Ethereum prices really plunge in these hours when the yen spiked and large FX carry trades were unwound. And so, you could basically get the situation that whatever is then liquid and available to sell to meet the margin calls sees violent moves as well.
Which is why I'm trying to teach you guys to pay attention to these things, because we have large organizations in their reports, i.e. UBS, we're going to dive into this report today, discussing and talking about these same things. And so I'm just here attempting to educate you guys as to what really moves these markets, i.e. risk on, risk off market parameters, and why it's so important that you join a community of like-minded individuals that actually pay attention to these things. So that way you can tap in and you can understand market movements and you can understand risk on, risk off market mood, and you can react accordingly. So this was shared in our private CYPRX Discord via one of our CYPRX researchers. So shout out to the CYPRX research team. By the way, if you guys don't follow them on X, they just reached 700 followers. So really do appreciate all the love and the support. Go check them out on X, follow them. They're always dropping non-biased, non-opinionated research, just documents, fundamentals, all things that go relatively unnoticed via the mainstream. And it's a good, safe, sound place for educational research based off this digital transformation, Web3, crypto, blockchain, so on and so forth. So make sure that if you guys are on X, go give them a follow. Let's try and see if we can get them to 1,000 followers on X. That would be phenomenal. And we'd really do appreciate the love and the support from you guys. So let's just read this. This is a document from UBS, like I said, shared recently in our CYPRX Discord. And this just goes to show that, remember, keep in mind, those posts that I just showed you guys on X, we posted those, a couple weeks ago. So we're just trying to show you guys that we are talking about the same exact things that these large financial institutions are talking about in their reports, which again, just goes to show that the info that we provide here at CYPRX is stuff that you should be paying attention to. So let's just read through a couple of these snippets and highlights that I have from this report. It goes on to read, We are approaching the midpoint of the decade that has brought rising equity markets, solid economic growth, and technological breakthroughs. Of course, this decade has also brought a global pandemic, the outbreak of wars, and societal challenges. In the year ahead, we look at key developments that we believe will shape the stage of the roaring 20s, including US political changes, falling interest rates, and transformative innovations in artificial intelligence and power and resources. So as we continue, I'm just going to go through, I'm going to read all the highlights that I have for you guys that I think you should be paying attention to in this report. So since the start of the 2020s, global equity markets, i.e. risk assets, are up around 50%. US nominal GDP has increased by 30%, and US corporate profits are up nearly 70%. All that in spite of unprecedented global lockdowns, the outbreak of wars in Eastern Europe and the Middle East, and the largest spike in interest rates and inflation in decades. Now, I have highlighted in here blue and red. Blue would be obviously, of course, bullish scenarios. Red would be risky scenarios or things that could weigh on the current market sentiment. So in blue here, I have highlighted the upside scenario would be to see lower taxes, deregulation, and trade deals adding to a positive market narrative built on solid growth and continued investment in artificial intelligence. The risk scenario is that trade tariffs, which we also covered in the previous yesterday's breakdown, excessive fiscal deficits and geopolitical strife will contribute to higher inflation, weaker growth, and market volatility. So like I said in yesterday's video that I shared with you guys in our private CYPRX Zoom call, we talked about this. We talked about the risks of President Trump's policies creating a higher inflation environment in the US in 2025, which could push back on rate cuts or possibly even bring rate hikes back to the table, which would be a very daunting scenario for risk assets, considering that one of the key metrics that has boosted risk on sentiment has been obviously, of course, central bank positioning, i.e. global central banks cutting and ushering in rate cuts.
Yeah, indeed. And the first point actually that I would like to make on this is that expanding global liquidity has been probably the strongest driver. In fact, I would say clearly the strongest driver of bull markets in recent times. And I don't just mean the crypto market, I mean financial markets in general, and especially since 2008, the financial crisis. Basically, asset prices are increasingly shaped by what previously would have been termed unconventional central bank policies that basically directly affect liquidity conditions. And these have actually increasingly become the dominant force in moving asset prices.
In expanding liquidity provisions, this would obviously, of course, weigh on sentiment if the opposite unfolded. So here we see again in blue, in our best case scenario, this is again according to UBS, we believe that central banks are poised to continue to cut interest rates further in the year ahead, and the returns on cash will fall. As such, we believe investors should position for lower rates by putting cash to work in investment-grade bonds, diversified fixed income strategies, and equity income strategies to sustain portfolio income. So obviously, of course, kind of taking a more risk-on approach is what they're mentioning, right? Putting cash to work. I highlighted that. We think there is more to go in equities with markets powered by falling interest rates, solid economic growth, and transformative innovations. We expect the S&P 500 to reach 6,600 by the end of 2025, which again is extremely bullish for risk assets across the board. Right? Moving on, it says, in currencies, tax cuts, immigration controls, and tariffs are likely to provide short-term support for the dollar. While further near-term strength cannot be ruled out, we believe the dollar is currently overvalued and overextended. Investors should consider selling further dollar strength, which I also highlighted because I'm a FX trader. As we continue to go on, it says, inflation fell more slowly in 2024 compared to 2023, but continued move down towards central bank targets. We anticipate 50 basis points of rate cuts from the Federal Reserve in 2024. The Fed has also already cut rates by 75 basis points, and we think another 25 basis point cut is possible before the year end in 2024. So maybe they do cut at their next meeting upcoming. I believe it's either next week or the week after as of time of recording this video breakdown. I just need to look at the calendar. Okay. But we do have a Fed meeting coming up where they will deliver their policy rate decision. So be mindful of that. Then here it says, this is again, showing you guys that we are discussing some of the same things that institutions are talking about in their reports, because here it talks about the risks to inflation. And remember, I said to you guys in that Twitter post, one of the key risks as we head into 2025 that we need to be mindful of is an increase or an uptick in inflation weighing on those rate cut bets, or possibly even bringing back rate hikes to the table in 2025, which could dampen risk sentiment. So here it says we also we also expect inflation to keep falling, even if we see selective tariffs contribute to one-off increases in some prices. U.S. good prices have been in deflation for the past 3 years, while stubbornly high shelf tier prices are easing. In our view, the Fed is likely to look past tariffs-induced prices increases and will cut interest rates further by 100 basis points during 2025. Tax cuts and deregulation under President Trump may further bolster the U.S. economy. Here it says risks to watch. We are monitoring the potential risks. While we do not believe select tariffs on U.S. imports from other countries are sufficient to derail U.S. growth, blanket tariffs would increase the risk of U.S. stagflation. So be mindful of that. And I've been an advocate of trying to show people, again, don't get blindsided by the optimism in the markets. Understand that if these things in this report and things that we've been covering here at CYPRX unfold, it could dampen market sentiment. So understand how to position yourselves. Again, remember, it's talking about risks to be paying attention to. Acceleration in developed Asia Pacific. We forecast Japan's growth to accelerate to 1.1% in 2025 from negative 0.2% in 2024, driven by higher wages and consumption. With the Bank of Japan rate hike anticipated mid-2025, that is a big statement right there. So that gives us an insight into when we could possibly expect some Bank of Japan rate hikes, which we know will most likely lead to a scenario where we see some unwinding of the yen carry trade. Remember, I played the video clip of the BIS individuals mentioning that that is one of the biggest risks to cryptocurrency markets is if we saw unwinding of the Japanese yen carry trade. So again, I'm just trying to show you guys large institutions are paying attention to this stuff. Why aren't you as a retail investor? It's most likely due to lack of education and you just don't know where to find this stuff. So again, tap into the CYPRX private community in our Discord. We hand type out fundamental reports on this stuff, and we have weekly Zoom calls breaking all of this stuff down. Now, here it also says, furthermore, we expect further interest rate cuts from the European Central Bank, Bank of England, and Swiss National Bank to support cooperate investment. So I highlighted this because it just projects into the future. And again, remember in 2024, risk on appetite was primarily driven by major central banks slashing interest rates. And so if we can see that heading into 2025, then most likely that sentiment, give or take some slight retracements or some corrections in the short term, will obviously, of course, prevail the risk on sentiment and drive prices in crypto higher. Moving on, it says, now the Fed is still on course for lower rates. Although tariffs could temporarily increase inflation, we believe the Federal Reserve will continue its path of rate cuts towards achieving a neutral policy stance with anticipation of 100 basis point cuts in 2025 from the Fed. The Fed will closely monitor factors that could have a more long-lasting impact on inflation or inflation expectations, including limitations in migration, blanket trade tariffs, or significantly looser fiscal policy. So again, same things we've been telling you guys to be paying attention to. Hopefully the narrative that the Fed is going to continue to cut rates remains on the table. But if we see an uptick or an increase in inflation, those expectations could slightly dial back as the Fed holds interest rates for a prolonged period of time to tame that inflation. And then later on in 2025, maybe continues the sustainable path towards cutting rates. All right. Continue on. Here it says they believe equities markets, we already went over that, S&P reaching 6,600 by the end of 2025, which is bullish long term. Bond yields set to rise, and maybe they're potentially rising too far. U.S. Treasury yields rose anticipation of Trump presidency, but with the Fed likely to stay on rate cutting paths and plans to loosen fiscal policy, facing potential congressional constraints, we think yields are likely to fall in the year ahead. I highlighted that because lower bond yields tends to reflect itself in a risk on appetite. All right, so just keep that in mind. I highlighted that as well. Now, last but not least, I believe these are the last couple of highlights I have for this. It talks about the bullish scenario and the worst case scenario, the bear scenario, okay? And it's just mind-blowing seeing this from an institution because this is exactly what we touted to you guys, okay? So here, for their best case scenario, most expansionary U.S. fiscal plans are shelved and inflation falls towards target. Bond yields fall slightly and central banks consistently cut interest rates towards neutral. U.S. equity markets surge on strong U.S. growth and AI optimism, and inflation remains contained, right? Again, these are the same things that we've been continuing to tell you guys here at CYPRX. Under continued interest rate cut optimism, under continued soft landing narratives being achieved, seeing continued sustainable growth, the bull market continues. Now, on the opposite side of the spectrum, they also talk about the bear case. And would you look at this? Yesterday in our video, we talked about President Trump's tariffs potentially being imposed early in 2025, increasing inflation. And here, look at what it says. Imposed of large blanket tariffs on U.S. imports from multiple countries and retaliation from trading partners triggers higher U.S. inflation. This is directly coming from a large-scale institution. Okay. If this were to unfold, what would most likely follow thereafter? The idea or the market starting to price in higher for longer interest rate environment, or possibly even bringing rate hike fears back to the table to tame spiraling out of control inflation. Okay. And so it's just interesting to see these institutions talk through these scenarios, and you have all these carpet talkers on the internet that say, oh, Cyprus, all you do is put out a bullish and bearish scenario. And it's like, yes, that's exactly what we do, because that's what the financial institutions do. You have to play chess with these markets. You have to be prepared for both scenarios. You cannot just marry a bias because you don't know the future. You can't just say that the market's going to go up for forever. Instead, it is better for you as an individual to remain adaptive and be able to change under market conditions that change rapidly. Last but not least, I thought that that was the last clip, but I thought that that was the last piece of that fundamental report, but here I have another highlight. So it says, we think that as of 2025 advances, most major central banks will want to bring interest rates back to a level that is neither stimulative nor restrictive for the economy. From current levels, we expect a further 125 basis point cuts from the Fed, 50 basis points from Swiss National Bank, the European Central Bank, 100 basis points, and then another 125 basis points from ECB and another 100 from the Bank of England. The Fed has stated that it will be monitoring net inflationary effects of the new U.S. policies as they are introduced, and we think it could cut rates more slowly if inflationary risks rise. But in our base case, we do not expect new U.S. fiscal policies to have significant upward impacts on inflation, and believe the Fed will likely look past some of the one-off prices rising relative to tariffs. It is also important to remember that rates could fall faster in our best case in the event of consumer slowdown in economic activity. We recommend limiting cash and money market holdings to the amount needed to cover 1 year of spending needs. So again, they are optimistic for the year 2025. I am optimistic for the year 2025. What I personally think, and again, this is just my personal opinion, is I think we're going to start to see some economic scares, some possible things weighing on sentiment at the first half of 2025. And then second half of 2025, we're going to see the bulls kick it up in a gear notch. So that's just my personal opinion. I think that we're slightly due for a market pullback. I would not be surprised if that unfolded the first half of 2025 and then the bull market continued the second half. I could be wrong, but again, just be monitoring these things. And if you don't know how to monitor these types of fundamentals, again, consider joining a mentorship program or a like-minded community like ours or many others out there that may talk about these things. So that way you stay informed and ahead of the vast amount of retail traders that on a normal day have no idea why markets are pumping or why markets are depreciating in value. So as always, I thought that I'd bring this to your attention. It was just really cool to read thoroughly through this, considering yesterday's YouTube release where I specifically talked about some of these factors to our private community. It was just awesome to see that from a financial institutional perspective, they are literally fixated their attention on the same exact things that we are here at CYPRX behind the scenes. So that just goes to show that we're pumping out good, valuable information that you guys can, again, attach yourselves towards, gravitate towards to learn a mature educational approach in these markets. As always, many blessings to you guys. If you guys enjoyed this quick update, reading through these types of fundamental reports, do us a favor, smash the thumbs up button and subscribe. I know that it's different from the normal videos that we upload, but I'm always just trying to educate you guys and, motivate you to really push forward with your education in this space and learn the markets that you're involved in. So with that being said, as always, be cognizant, be aware out there. Remember, none of this is financial advice. If you want to tap into our private community and get a more in-depth experience as to what it is that we're talking about, learning the ins and outs of these markets and what drives liquidity or sucks liquidity out of these markets, then head over to CYPRXtrading.com. We'd love to have you in our private Discord. With that being said, I'll see you guys in the next video breakdown.